Hi all, welcome to Personal Finance Reimagined. We are a personal finance and decision-making education platform. My name is Jeff Hulett, your host for today's vidcast interview. I'm the founder of PFR. All month long, we have been focused on home buying. We started with the $9 million of estimated value you could create for your retirement via homeownership. We then explored being adaptable and the many strategies for getting on the homeownership ladder. We talked through the home buying process with decision technology to help you be confident you'll make the best decision. Today, we wrap up home buying month with an interview discussion about one of the most challenging aspects of home buying, coming up with the down payment needed to buy your home. So I couldn't be more excited to have Mike Romano join us today. Mike is an executive with Stairs Financial, a down payment assistance marketplace. Mike's mortgage and home buying experience is vast. Mike has worked for mortgage lenders like Wells Fargo and for mortgage tech and marketplace firms like Lendsnap, Signia Documents, and Credible. Mike has also been in mortgage consulting, having worked for two of the four Big Four firms, PwC and KPMG. And actually, that's where I met Mike. I was fortunate to have worked with Mike at KPMG. So Mike, so very glad to have you here.
It's great to see you, Jeff. Thanks so much for having us. Excited to chat with you. And I love the mission you have at PFR. It aligns with what we're doing at Stairs. So excited to chat. It's always good to see you.
Oh yeah, thank you so much. So, what I want to do first is just sort of level set a little bit here, but why don't we start with the challenge? Okay, so we talked about a little bit about down payment assistance, and I mentioned sort of what Stairs is all about. So when I think of savings rates in the U.S., especially for younger people just starting out, I tend to think cash to close a mortgage is a massive challenge. I have four kids in their 20s, and each one of them are in that. And that's been a consistent theme with us. So many of my friends in it. But if you look at the numbers, I think we see it there as well. But tell me something. Is there more to the challenge?
Yeah, absolutely, Jeff. That's a great question. A great place to get started. I mean, there are a lot of people with great jobs and great incomes, and they're still faced the challenge of being able to buy a home. And coming up with that down payment is often really the deciding factor, and not just saving for that down payment, but there's a lot of things that are compounding and working against the borrower in our view that's making it so much harder, right? So right off the first thing that comes to mind is just affordable housing has just become scarce in general, right? There are less homes built and designed for the first-time home buyer or the low to moderate income home buyer. And that's probably a whole discussion topic on its own, right? Why is it hard for builders to profitably build and sell affordable housing? Land is expensive and there's a ton of regulatory red tape. It makes it hard for them to do that, right? In a profitable way. And so if there's less affordable home buying or affordable homes on the market, well, then you're going to get price appreciation on those homes, right? So scarcity drives up the price on these affordable homes that are available. And, as and it probably talked about, right, home price appreciation has exceeded income growth by a wide margin. And now it's gone on for decades. And we're talking about a massive gap for people to try to overcome.
And then, Mike, just real quick, thinking back to what you were just saying about home buyers, or I'm sorry, home sellers, you talked about red tape, which to me is code for zoning, and sometimes the NIMBY stuff that communities will get all wrapped around that makes it even more challenging to get houses built or whatever. But I'm kind of putting myself, I put my economic hat on. If I'm a builder and I could build a single house for $2 million, or I could build four houses, for $500,000 each for a total of $2 million. It just feels more efficient, right? Like, what incentives does a builder have to kind of drive into the maybe, and I don't know if $500,000 is like it's certainly a more affordable house than a $2 million house.
Sure.
But yeah, I just sometimes I wonder about that, right? Like what are the home builders' incentives, and are they really incented to build, houses for first-time home buyers or more moderately priced houses?
I mean, they're really not, right? Like just acquiring the land is hard enough. And then we talked about the not in my backyard, the NIMBY stuff, and overcoming just all those obstacles takes a lot of time, and the zoning and the permitting. And all of a sudden you've held on to this property for years before you even built the first house on it. But the actual cost to build this structure, like, is relatively not that different if it's a lower income or affordable house versus a $2 million house. So you are more incentivized to build one $2 million house. You're going to make much more profit on that than building 4 separate houses that you're going to sell for, much less. I think we make it hard. It's hard for builders to they're not incentivized to build those affordable homes, unfortunately.
Yeah. Well, let's let's go a little bit different direction. So, one of the things, and I'm thinking again about stairs, and I'm going to put on my economic hat again here. So, when stairs presents itself as a mortgage marketplace, right? And so
Sure.
I think it's really important to even start with that. What is meant by the word marketplace? So when I think of a marketplace, I think of like almost like like an Amazon or a Netflix. They are like Amazon's a marketplace for consumer products where supply and demand comes to buy and sell products, or same with Netflix, but with media and movies and whatnot. So can you talk a little bit about a marketplace? And then again, what sort of, who's on each side of that transaction that Stairs is facilitating?
Yeah, so I mean, you hit the nail on the head, right? I mean, just like Amazon, we are operating as a marketplace connecting buyers and sellers, right? And so in this case, in the context of the mortgage industry, the supply side is going to be the lenders. It's going to be lenders and banks and financial institutions who have the mortgage product, who are going to analyze, the creditworthiness of the borrower and extend the offer of a loan in order for for a borrower to buy a home, build a home, et cetera, right? And so the supply side, then, like, those become our paying customers, the lenders and banks, in terms of like our monetization model, right?
Right.
That it's the lenders and banks who actually are our clients in this marketplace. So the demand side then is for us, it's home buyers, but specifically for us, we really are focused on the first time home buyer. So the demand side is that first time home buyer, individuals looking to secure a loan to purchase a first home. So what we're giving them is a user friendly interface that enables them to compare offers from different lenders, right? It's, again, going back to the marketplace, you don't just see one offer on Amazon, right? You see 15 products to choose from, right? Same idea. We work with multiple lenders who have products specifically designed for first-time home buyers. When the borrower comes to us and they go through our short form, they're going to get to see a variety of options for them to compare and contrast and select the option that's best for them. And the added thing that we tie in, and going back to your first question, we're not just tying in the lenders, products that are FHA or VA or conventional loan products. We're also bringing in what other down payment assistance programs that they approve for and that they like to work with, that the borrower is likely eligible for. So the borrower is getting an even clearer understanding of the true costs of the loan, how much they're eligible for in terms of down payment, to really help them figure out, I want to talk to this lender. I like this program. I'm excited about it, and to make that choice. So that's how we're functioning as a marketplace. We're not guiding them in any one direction. We're presenting them with the options. They choose where they want to go.
So does that make down payment assistance just sort of one of the features, right? So it's funny because when I think of Stairs, I think of down payment assistance. I kind of connect those two things. But what I think I just heard you say is Stairs is much more than just down payment assistance. Maybe that's an important part of it. But it sounds like it's a marketplace that's quite broad in terms of facilitating the entire transaction.
Yeah, I mean, we really pride ourselves on like the user experience. That's something we are laser focused on. So, we throughout the site want to make sure that the borrower is educated with what they're doing. Why are we asking certain questions? Why is certain information needed in order to like help understand what loans they might qualify for, and understanding of the different loan types or down payment assistance providers, whether they be public or private. And there are over 2,000 down payment assistance programs out there now, right? It's
Right.
There's not a single source of information there,
Wow.
at least not until stairs came. So like you said, right? The down payment assistance is part of it, and of course, we want to show them what they're likely to qualify for, but we also want to help them understand what they're getting into, like on a holistic level. How are these costs calculated? What is APR versus interest rate? What's a forgivable loan versus a grant? There's lots of things that go into it.
Right.
So when they actually engage with the loan officer, they're coming in much more educated and prepared to have that conversation about moving forward. It's not sort of they're not going in blind, right? They're going with much more understanding of the products available to them and why they chose that particular product.
Now, just curious, and I'm just thinking about the buyer, right? The perhaps the young person that's buying their first home. Do most people come in with the market that they want to buy into kind of locked down, like, oh, I want to be in Dallas, Texas because my first job's there or whatever, or I want to be in so-and-so? Or do people ever come in almost the opposite way, which is, I can get a job anywhere. I want to own a home in a market that has the best down payment assistance program. So it's almost like they use the platform to help them target the best market for them to move into and whatnot. Maybe I've got that completely wrong, but I'm just curious about like how people interact with the marketplace.
Yeah. So so much of what down payment assistance is available to a buyer is location based, right? Like, because down payment assistance can come at the city, county, state, federal level. They can be from nonprofits. They can be from private lenders themselves. So it all really starts with where the borrower wants to buy. So the answer to your question is a little bit twofold. They do come to us starting with where they're intending to search. That could be based on where their job is or where they think they can afford. What we encourage once they get to a place where they see some options and then they can speak to a lender about what's available, that's where we encourage the real estate agent side of it to come in and say, hey, I know you're looking in Dallas, but have you considered Denton? It's not far away, and it has many of the similar amenities that you're looking for, but it's more affordable. And that's where there are other sort of players involved in the ecosystem that can help the borrower and that we work with too to keep them informed. But ultimately, like, they are coming to us. They're starting the search with an idea of where they want to be.
Right. And you're helping inform that. And what I heard was, I love that example, which is Dallas is a big area, let's say, or wherever. Most markets have lots of optionality in terms of where you live in that market. So the idea of like Denton is like, maybe they have a great down payment assistance program, or maybe you can patch together several pieces and you're like, oh my gosh, this is a place where I could live and get the house I want with, the financing I need. So, hey, let me ask you a little bit different question. Again, back to that marketplace. So, it's supply and demand. So you've got the end consumers, first-time home buyers mostly that are coming to consume and to be a demand on that. Then you have the supply, which are the lenders. Talk a little bit about. Like, I'm imagining not every lender is the same when it comes to both their willingness and capability to serve the first-time home buyer. Is that a thing? I'm just curious. And if it is a thing, how does Stairs kind of either manage that to make sure that they've got those lenders that are truly committed to that universe of clientele?
Yeah, and that's a great question, and you're 100% right. I run into it all the time. There are lenders who, prefer not to work with first-time home buyers. They view them as more challenging. They view, these down payment assistance programs as not profitable because they take a lot of time and effort to get through, and sometimes, their fees are capped too by these same, HFA programs. Right. those people don't become our clients. Those lenders don't become our clients. But, the only people on stairs are lenders, who we've met with, who understand our mission, understand who our borrower is,
Right.
and know how to work with them. I know how to do it well and want to. And I think going a bit deeper, before stairs, the process of trying to find down payment assistance was very complex for a multitude of reasons. First, you have to be aware that it's out there, and there's not a lot of marketing done by down payment assistance programs, right? So first you have to be aware that it's out there. Then you got to try to find a program in your area that you might be eligible for based on what you know of your financial situation, and if you can find the guidelines for that program. Then you have to go find a lender who's approved with that program. And again, to this question, some of those lists are very long, but really some of those lenders are only on there just to say they're on there. They don't actually do a lot of loans or really want to do the loans. And so even if you connect with a lender there, you might get connected with a loan officer who has never done one of those loans and doesn't know where to get started or even how to do it, right? And so the beauty of stairs and us, the clients, having this relationship with our clients of lenders who want to work with these programs, and then, further directing our consumers to the loan officers in their offices and branches who know these programs and are familiar with them and can help get them done. And so that's what helps make our consumer experience so much better than what the alternative was before we came along.
Right. It's funny. You started off making a comment about the communication of down payment assistance programs, and I just want to jump on that a little bit. Because I guess my way of thinking about it, and I may have this wrong, and I might say something that hopefully I don't offend any government authority, but I when I think of all the entities in the world in terms of how they communicate product, right, in terms of marketing and advertising, and I kind of rank order them, I kind of put the government at the very bottom of the list, right, in terms of it's just not they're in their makeup. It's not in their incentives to market, programs to the local populace or whoever it is.
Right.
And again, I might have that wrong. I hope I don't get any hate mail out of this, but it's just been my observation. So I almost see stairs as really, fulfilling a super interesting kind of space, which is you're kind of acting like their marketing arm. Right? It's like, hey, would you say there's 400 down payment assistance programs in this country?
Oh, no, well over 2,000.
Well over 2,000 of these. And does anybody know who they are, where they are? I didn't. So now I know where to go to find out. But, again, I'm just thinking of, it's almost like a byproduct. It's not like you guys went in to be, I'm going to be the marketing person for, the Dallas or for, like my area, Fairfax County, Virginia or something. But you kind of are in some ways when it comes to this very specific thing around down payment assistance.
Yeah. I mean, from the government side, they're like often perhaps not as funded as they could be to begin with. And so marketing budget is non-existent. You might, in some cases, like if there's a private lender who really wants to, push a new program that they have, which is great and we support, like you might see ads around that, but often it's really just on their website if you do a little bit of digging. So there's, just going back to again, the first question of why it's so hard for borrowers to come up with the down payment. There's just limited awareness of these programs that are out there.
Right.
A huge percentage of people still think you need to put 20% down. And so just not, there's so many people that aren't even aware of the existence of these programs. Right. And then there's no centralized area for information. There's no program that brings in all of the HFA programs from across the country. It says these are the guidelines. This is how you fit into it, and this is where you go, and this is who you talk to. It doesn't exist. The programs are complex, and they're different, and they vary depending on who's providing them and where, and what the loan type is, and the funding source, and the eligibility requirements. Right. So marketing these things is challenging, and there's just no central area to find that information. We're hoping to help bridge that gap and tie borrowers in with the programs they're likely to qualify for, with lenders who know how to do them and want to do them.
Right. And if anything, I think of just comparability, right? So if you go to one municipality and they have their down payment assistance program, and then you go to another one, they're not even formatted the same, right? Like you don't even, you can't set them, you can't easily, I should say that, easily set them beside each other and go, okay, here are the rules, and here's how the rules compare, and here's how much how much assistance is available. Here's how long, how long it is, guidelines around how long that you'd have to maybe commit to stay in the market and things like that. So anyway, no, I think that's tremendous. I'm a behavioral economist. We think about things like, we call it sludge, but we think about things that the way forms are designed that make it more challenging to assume consumer welfare, and it's like nobody's intending. Like there's nobody out there going, "Ha ha, let me make this hard."
Right.
But the fact of the matter is, it's just it kind of evolves, and again evolves separately across all these 2,000 different programs. So anyway. Well, let me ask a little bit different question. So we talked about the supply and demand. The demand side's pretty straightforward. First-time home buyer, the person trying to get on the home ownership ladder. The primary supply is the lender. Now, we talked about the municipalities or the providers of the down payment assistance programs. I would see them, they're not necessarily, I guess they're part of the supply too, right? Because they're part of the whole funding mechanism to be able to get them on the home buying ladder. Are there other entities we should talk about that are sort of in the orbit and are important in this process?
Yeah, well, and so we already touched on one right away, right? Our home builders, and home builders are responsible for getting the inventory online, and can they be incentivized? We talked about this, but can they be incentivized to build more of the affordable housing and the starter homes for people to get their foot in the door? And then we can work with them in providing the financing options and exposing the builders who often have their own lending arms to expose them to the down payment assistance programs that are out there that maybe help encourage more buyers of their home. You touched on the municipal authorities. Another role that they play that is critical is dictating policy around property taxes. And property taxes, especially in a state where I am, like Texas, where they're very high, can greatly influence whether or not someone can afford a home. Now, of course, we understand that governments need revenue, and there's only a handful of sources to get it. But my point is that they do play a role in this, in how they set the policies around property taxes and how that affects first-time home buyers.
Yes.
The housing finance agencies, right? So the HFAs, you've heard me reference the acronym HFA in this conversation. They're state chartered authorities established to help meet the needs of the affordable or the affordable housing needs in their particular state. So they can vary in different characteristics and as a relationship to state government, but they're typically independent agencies that operate under the direction of like board of directors that are appointed by each state's governor. Long story short, they administer a wide range of affordable housing, community development programs, and we've proactively gone out to a lot of them. We can introduce them to new lenders, and then they can help me get lenders onboarded quicker. So there's a nice relationship there. And then also, of course, the real estate agents and brokers, and why, and that's especially important right now, and something we're keeping our eye on is with that NAR settlement, National Association of Realtor
Very
settlement. Yeah, and that ties that could be massive for us.
And let's just real quick, just for the listeners and viewers here, the recent settlement you referenced. Let's just talk about that for a second. So, Supreme Court ruling that really is upending buyers' agency, if I understand it correctly. In other words, it was found to be, I don't know if monopolistic is the right word, but it was somehow unfairly competitive, and in effect for the particular case is being seen as a test case now, that it, in effect, is the traditional 3% that would be available to buyer's agency as the realtor representing the buyer. They've kind of if I understand the potential long-term impacts is it could upend sort of the hold that the real estate industry has on buyer's agency and sort of managing the buyer with getting on the home ownership ladder. Is that fair? Or
yeah, I mean, I think in summary, like it changed the model of who was paying the buyer's broker, and
right.
where it used to just be sort of guaranteed that it was the seller was paying both the buyer's agent and seller's agent's commission.
Right.
That's potentially no longer the norm. Now they can still happen, but it can't be advertised on the MLS. That's separate. But the impact it could have on first-time home buyers is effectively you're supposed to negotiate your buyer's agent fees up front in a sign-on agreement up front.
Right.
It's already, as we've been talking about, hard enough to come up with the down payment and closing costs for a lot of these first-time home buyers, low to moderate income buyers. If you're going to ask them to now pay 1.5%, 2%, 3% sale, commission up front, like on top of that, that's going to make it, frankly, out of reach for most. And so it'll be interesting to see what sort of normalizes out of this as it relates to first-time buyers. Is it going to be a flat fee? Is there going to be, something else where it's compensated by the seller? I don't know. What I do hope is that agents who still understand wanting to work with first-time home buyers, knowing that buyer becomes a repeat client,
right,
and without wanting to make it overly burdensome on them, with their first home purchase. But interesting times.
Well, let me ask you about that, because as you know, I'm a professor and I teach at James Madison, and one of the things that we talk about, or that I encourage them, even when this first came out, my whole thing is always, you're a first-time home buyer, you've never been through this process. So for me, I don't necessarily need a buyer's agent, or the only reason I'd want a buyer's agent is because I don't want to do the work, and I can afford not to do the work, but I understand what needs to be done and things like that. So because I bought and sold, say, 10 houses in my life. Whereas for them, it's their first time home buyer. So I'm like, don't think of them as it's a cost, but it's a cost of education, and you need to educate yourself. So my whole thing has still been like, you really want to work with a realtor. Talk about that. Do you think, is there a way, and maybe Stairs even helps with this, but is there a way for a first-time home buyer to get through that process without a buyer's agent?
I guess it depends on their own level of comfort and education and familiarity with the process. Another thing that we might see is just that, more sellers agents are working with both parties in order to sort of facilitate that. I agree with you on whether or not I might need an agent, but I mean, the first time I bought a house, absolutely. It's nerve-wracking. You don't know what's normal, what's not in the process, and why certain things are delayed or certain things aren't. It's comforting to have that agent there, even if you can do all the research on the home you want to buy online. It's still and then negotiating, people aren't always comfortable with that. So there's a lot of value in what the agent does, especially with the first-time home buyer. It'll be interesting to see, how that commission piece shakes out.
Well, it's interesting. In my class at JMU, we do a home buying simulation using our home buyer's choice technology, and it's just a decision tool that helps them with that process. And I'll have realtors come to the class that kind of act as a panel as they do the simulation out of class. They come in and present it, and then we have this panel that kind of give them feedback. So what's interesting is the realtors will listen to them. And now think about what they're doing. They're using a decision app, which is very helpful with technology. They're going to, say, Zillow or to Redfin or to other online sources, and which I encourage them to do, because that's a great place to educate themselves. But in effect, the simulation, where it's a great simulation, but if there's anywhere it falls short is nobody's getting into their car to drive by and look at the property, right? They're undergraduates, and they're potentially pretending to buy a house in a market nowhere near where the school is. So, the realtors will basically come in and say, that's great, and maybe the data is 80% of what you need, but how do you know, right? You can't get away, you absolutely look at the data, but don't think that that's all you need, right? You really need they're sort of talking about you need the experience of a good buyer's agent, but what they kind of bring up is, but here are all the things that you're not going to find in the data. Anyway, I always find that to be kind of, and that's very eye-opening for them, because I think there's this belief, maybe naivete, right? That, oh, I can just get the data and I'll sort it out. And it's like, well, it'll get you part of the way there, but there's more to it. So let me switch gears a little bit. So I've been talking a little bit about my class now, and let's say you came to my class or just to any group of first-time home buyers, and you were talking to them, more about how to get started with stairs. What are the key things to look for to be successful from the perspective of that first-time home buyer? Can you talk a little bit about, how your process works for, the demand side, so to speak?
Yeah, I mean, I would say it'd be crazy not to come to Stairs to start your search, right? We're a place where you can find a lot of information and programs and resources to help you get that first home that I think you're not going to find really anywhere else, and connect you with lenders who know who you are, who want to work with you, have put their hand up to say, send us more people like this. We want to work with them. We want to help with them. I think, in just a few screens and a short number of questions with education, mixed in throughout, you're going to be provided a number of options for you to really analyze and compare what solution is best for you. I think, be honest, be realistic about who you are and the position you're in. It does no good to say you can afford a house that you can't afford, because ultimately you're going to be validating your income and credit and assets. And so be honest with where you are, and then let's see what the lenders can do to help. They want to help you, right? And so answer the phone when they call or they text or they email. We're only going to match you with a lender that you choose, right? So we're going back to choice and consumer experience on our site. You're going to compare the different options. You're going to make your decision. Only that lender gets to get your information. We're not selling that information out all a bunch of other places like other marketplaces do. And that lender is going to contact you in the way that you want to be contacted, either phone, email, or text. Answer the phone. Get on the phone with them. They want to help you. And so that's what I would encourage you to do. Get that conversation rolling. Maybe you're not ready today because of a credit situation or income, but start having that conversation and understand where you need to be in 6 months so that you can buy that house, right? Don't wait 6 months and think you can do it on your own. Have that conversation now and learn about what the steps are going to be needed. And maybe you can shrink that to 3 instead of 6 months.
So, you mentioned credit, right? And then really what I sort of associate with, paying your bills and ultimately, not to simplify it to one number, but having a super solid FICO score, right? So, which can be a challenge. I mean, I'm thinking of the challenge less about being I have bad credit to I have no credit.
Yeah.
Right. And, it's funny because in my class, I'm dealing mainly with 20-year-olds, probably, sophomore, junior, senior types. We talk a lot about, getting that first credit card and, proving to the world that you can use a credit card, you get the bill every month and you pay it. Right. It's as simple as that. And, I even encourage them, even if you don't absolutely need a credit card, it's not credit for the reason necessarily you need credit, don't need credit. It's really credit to build a credit score or to build a credit profile that someday you can take to Stairs or you can take to that first time home buying situation, and you can have that FICO score north of 720 or whatever it is. So anyway, no, I love the messaging. I'm really connecting with that. That makes a whole lot of sense.
What's encouraged, I mean, you mentioned FICO. There are sort of other credit rating sort of ideas and tools coming to the forefront, and and these companies are trying to get lenders to sort of accept them and investors to accept them. One thing that's encouraging, credit history can be hard when you're in your early 20s, but a lot of places are starting to take a rent history as a sign of credit history, right? So, if you can prove while you were in college or shortly thereafter, you're always paying your rent on time, that's something else you can do to make sure that you start building or should start proving yourself,
Right.
like you said, as a credit worthy borrower, even if you don't have, 5 trade lines that have 10 years of experience, 10 years of history on them, which you won't, right? There's other things you can do to be mindful of to help improve your situation.
Yeah. No, that's great advice, Mike. I completely agree. So in terms of just the, you come to the marketplace, what can they expect? Like, is there discussion primarily with, so I'm just sort of trying to go to understand real tactically now. Like, so they come to the marketplace, they fill out the forms and they get the educational information, but ultimately, is it being sent to several lenders that could be a match, or is it declared to sort of a single lender that they sort of say, yeah, I want to, learn more from, mortgage company ABC?
Yeah. So anytime they get, after they complete the short form, answer a handful of questions, we are taking that information and then running it against the guidelines of our lender clients and the various down payment assistance programs that they work with, right? So I'll use Texas State Affordable Housing Corporation as an example. I'm in Austin, so TSHAC is a very popular HFA program here in Texas for up to like a 5% down payment, et cetera, et cetera. So we know that, for example, for TSHAC, you have to have a minimum, 640 FICO, you have to fall within a certain income range, right, et cetera. Based on what the borrower is telling us, we'll know whether or not they're eligible for TSHAC. They don't have to go look it up, we will. And then we're going to show them the lenders that we work with that are also approved with TSHAC that want to work with them. In addition to that, like the lenders that we work with might say, yeah, I want to show, the TSHAC assistance amount, but we can also show the interest rate and the APR and the closing costs with my loan because we can tie into their lending guidelines as well. They can, they can share that with us. And so we're gonna ping all the lenders and their different guidelines and come back with what they're approved with, and also any of the down payment assistance if they're eligible. Right. So then they can really see line by line which one to go to or which one makes the most sense. You actually will never see just a single result. We can't just show one result. That would be considered steering, and in this space. Yeah. So we'll always show at least 2 or 3. That's why we always, in each market we're in, we have a handful of lenders with a variety of programs. So we always have optionality. And so the borrower is they're empowered to make the choice that fits them.
Good. Now I'm imagining the user experience is, yeah. So to me, choice is a double-edged sword, right? It's like you can have too little choice.
Oh yeah.
But you can also have too much choice. And to some degree, I was talking about sludge or whatever, but to some degree, it's also how that choice gets presented. Is it presented in a way that's easy to understand, where I can sort of see where, this is where these lenders are, this is where these down payment assistance programs are. But you want to talk a little bit about, like, how do you keep the borrowers from feeling like they're overwhelmed by the amount of choices that they need to make?
Yeah, I mean, we've been strategic and thoughtful in each market that we're in, the number of lenders that we have available. We completely agree. From the outset, we said, there can be too much information to an already possibly overwhelmed borrower demographic, right? This is all that's new, so it can be overwhelmed easily. So we just focus on limiting the number of lenders we work with in each market. When we display results, it's algorithmic, right? There's no favoritism over any lender or the other. That's also allowed, and we don't do it. So it's algorithmic, typically based on what the lowest monthly payment might be or the most assistance amount available to them. But we show, and then we'll show a handful of other options for them to sort through. But like I said, just keeping it to between 5, 8 lenders in each market helps control, the feeling of being overwhelmed and having too much to choose from.
Right. Where my head was just going is, back in the day, I like you, I used to work for Wells Fargo, or actually a bank that was bought by Wells Fargo. But we were the my group ran the Lending Tree relationship, right? And so we did, at the time it was Lending Tree and a couple other big aggregators that were kind of driving volume for us. And it's interesting because when I hear mortgage marketplace, for lack of a better contextual, maybe it's the wrong thing to do, but my head does go to Lending Tree because that's something I remember. So, but what I just heard you say is, what to me is really interesting is you guys are a different marketplace from what I'm hearing. I mean, obviously, you have maybe part of that, which because, of course, like Lending Tree, they have mortgage lenders, and you guys do, but you guys go beyond that. And to me, it's the overlay of the down payment assistance programs is what, to me, really makes you guys, very, very unique in your space. So anyway, I don't know if you have a comment on that.
Yeah, I mean, that is our niche, right? That is what makes us different. We, I've summed up our platform by saying we're Lending Tree focused on first-time home buyers. I've said it many times. I don't like having to necessarily do it, but it paints a pretty clear picture of what we are. But then I think we go a little bit further to your point, tying in the down payment assistance. Others aren't doing that. I think we do a better job focusing on the consumer experience as well, and how we protect information and how we share it. But that said, yeah, I mean, it's a hyper-focused marketplace, just trying to, our founder, is he's Black founder. He, serving, helping underserved communities is a very important. It's a passion of his, right? And he has a great story of his family and how they were able to get their first home and what that's meant for his family downstream. So I think we are more focused on trying to help typically or historically underserved communities, the low to moderate income buyers. And that is also, a specific niche, and what makes us different is the mission there.
Oh, that is just fabulous. I love that, Mike. And I think that's actually a great place to kind of wind up here. I think you just said it really well. But before we go, first I want to thank you very much, Mike. It's been great to reconnect with you. Good to see you again. Love how our paths sort of kind of interact and sort of come back and forth sometimes. So I think that's fabulous. Glad to find a good reason to connect with you. But before we wrap, I just want to say, is there anything that you'd like to summarize with or leave leave folks with that are watching and are truly interested in what Stairs is all about?
Yeah, I mean, I think just going back to the supply and demand side, right? I mean, if you're a lender and you're listening, let's chat. Like we have a lot of borrowers and we're licensed in 41 states and we're growing, and we want to work with lenders who want to work with first-time home buyers. It's not for everybody, but for those who do, we are bringing quality borrowers to our lender partners and helping them buy homes, and it's exciting. To potential home buyers who are listening, or parents or family members of potential first-time home buyers, send them to Stairs, send them our way, and let's see what they might be eligible for. We are on a mission to help people build generational wealth, which has been something that there's a massive gap in our country, especially along racial lines, and we want to help close that. But regardless of your race or background, there's a lot of very qualified borrowers out there who just are missing that down payment piece to get their first home, and we are a great resource to start.
All right. Wow, that was wonderful, Mike. Now I want to ask you one final question here. As you know, I teach at James Madison. Would it be possible to have you or someone from Stairs come and talk with the students this fall?
Yeah, we'd be open to it. I mean, the rest of my team is on the East Coast, so there's probably a way we can make that work. It would be good. Fun. And well, I want to thank you too, Jeff, for having us. Appreciate that.
Oh my gosh, today. No, I love it, and appreciate the work that you guys are doing. I kind of come down on the side of I love, I'm an economist. I get it. Making money is important, but when you can wrap together an important mission like helping low to moderate income folks to get on the home buying ladder, to overcome different challenges with building wealth, with making some money too. To me, that's what makes it all so worthwhile, and to me is so exciting. So anyway, I will get you to come hopefully this fall, or someone on your team. And again, Mike, thank you so much, and I look forward to talking to you again.
Absolutely. Take care. Thank you.
Yes.